You are watching your money disappear in real time. Not slowly, not quietly, fast. And the worst part? You put it there yourself. This is what a Bitcoin crash actually feels like from the inside. And by the end of this video, you're either going to be ready for it, or you're going to realize you've been making the exact mistake that destroys most investors. Let's go. Picture this. It's early morning, around 6:47. Your alarm hasn't even gone off yet, but your phone is already buzzing. You reach over, half asleep, thinking it's nothing important, but it doesn't stop. One notification, then another, then another. Now you unlock your phone. First alert, your crypto app. Second, your friend texting, "Bro, you seeing this?" Third, another price alert. Now your heart's beating a little faster. You open your portfolio, and for a second, your brain doesn't even process what you're looking at, because that number feels wrong. Not unfamiliar, just wrong. 2 weeks ago, everything felt different. You were up, confident, maybe even thinking, this might actually change things for me. Now, Bitcoin is down 50%. And that $15,000 you invested, it's sitting at $7,500, just like that. Half your money gone. And here's the part that hits the hardest. This isn't new. This has happened before, multiple times. And every single time, people told themselves, this time is different. It wasn't. And it won't be next time either. So the real question isn't if this will happen again. It's what you are going to do when it does. Let's be honest for a second. Most people don't invest with a real plan. They invest with a feeling. They see it going up, they feel like they're missing out, so they jump in. At first, it works. Price goes up, portfolio grows. Confidence builds. You start checking your phone more often. But now, it feels good. You start telling people about it. Friends, family, co-workers. And slowly, your identity starts getting tied to that number. But here's the problem. Almost nobody asks this. What happens if this drops 50%? Because thinking about that feels uncomfortable. So people avoid it. And that is exactly what costs them later. Now let's talk about what actually happens during a crash. Not just in the market, but inside your head. When your portfolio drops fast, your brain treats it like a threat. Your heart rate goes up, stress increases, and your ability to think clearly, it starts disappearing. So what do? You refresh the price. Again, and again, and again. You open Twitter, Reddit, YouTube. Everyone is talking. Some say it's over. Some say it's the biggest opportunity ever. And now you're stuck, confused, stressed, overwhelmed. And this is where most people lose money. Not at the top, not at the bottom, right here, in the panic. Here's something that might change how you see this. When you panic sell, someone is buying from you. Think about that. You're selling out of fear, and someone else is buying with a plan. Same market, same price, different mindset. And that difference is where money is made. Now let's understand why crashes happen. Because they're not random. There's always a chain reaction. Interest rates go up, money flows out. Leverage gets liquidated. One domino hits another. Fear spreads, and suddenly everyone is running. That's how you get a 50% drop. Fast, violent, and unforgiving. And here's the truth you're not gonna like. Bitcoin is built to move like this. It doesn't go up slowly, and it definitely doesn't go down slowly. It moves hard, up and down, again and again. Now this is where everything changes, because there are two types of people in a crash. The first type, they panic. They see the price falling, and they feel like they need to act. So they sell. Maybe not at the bottom, but close enough. And for a moment, it feels like the right decision. The pain stops, the stress goes away. But then, the market starts recovering. Slowly, then faster, and now they're stuck because buying back in feels wrong. So they wait, and suddenly, they missed everything. That's how most people lose, not in one big moment, but in small, emotional decisions. Now, the second type of person, they feel the same fear, but they don't react immediately. They pause, they think, they go back to their original reason. Why did I invest? Did anything actually change? If the answer is no, they don't panic. Some of them don't just hold, they buy more. And that one difference changes everything. Now listen carefully. A 50% crash is not what destroys people. What destroys them is everything that comes before it. Buying because of hype, selling because of fear, repeating that cycle again and again. That's what ruins people. The crash isn't the problem. Your reaction is. Let that sink in. So what do you actually do? Simple. First, only invest what you can emotionally handle. If a 50% drop would break you, you're overexposed. Second, write your plan down. Why are you in this? When would you exit? Because in a crash, you won't trust your own thinking. And third, ignore the noise. Because when everyone gets loud, smart people get quiet. Now let me take you back one more time. Early morning, phone buzzing, portfolio cut in half. That moment is coming, and when it does, you will make a decision. And that decision will change everything. You didn't lose money in the crash. You lost money the day you entered without a plan. The crash just exposed it. So be honest. If Bitcoin drops 50% tomorrow, what are you doing? Buying, holding, or selling? Drop it in the comments and be real, because that answer is yours.